discussion from Meer Incorporated on trends that highlight the need for integrated approach to client and compliance management in the wealth management sector. Thank you for joining us today. I'm Lakshmi Ramnath, founder and CEO of Meer Incorporated. I founded Meer Inc. in 2010 to create solutions which address the risk and compliance challenges that financial firms were facing after the 2008 financial crisis. Even today, the firms continue to deal with similar challenges. As a financial industry technologist, having worked on complex systems in big banks for worldwide financial markets, it seemed obvious to me that an integrated approach to managing processes across the firm was very much needed for effective risk, compliance, and client management. This has been our driver to building our great suite of solutions at Meer. When we hear about fines and consent orders, it's clear that integration is really the missing piece. Today's clients want mobile real-time information. Registered reps and advisors want tools they can use anytime, anywhere that can help them manage clients. Compliance departments need to be always in the loop to provide proper oversight. Regulations have grown in numbers and complexity, and as a result, their workloads have increased dramatically over the years. Use of proper technology to help with these processes is an imperative. The pandemic has accelerated many of these ongoing digital trends. Client interactions on video have become commonplace, and with it, client expectations for faster operational turnarounds have increased, whether it be for recommendations, disclosures, KYC, account opening, or AML verification. The pandemic has also brought forth a lot of risks. SEC and FINRA have been very active in highlighting these risks to the market. Under the new SEC chairman, Gary Gensler, what we are hearing from the markets is that scrutiny of firms during examinations is likely to be intense, specifically on the protection of retail clients, including suitability of the products, costs, fees, and recommendations, and adherence to the regulation best interest principles. Conflicts of interest, bad trades allocated to clients, trade churn for increasing fee income, customer complaints will be taken up very seriously. Money laundering and cybersecurity have also become big concerns, and firms have to prove their effectiveness of their processes. Inability to conduct proper oversight will not be considered as an excuse anymore. And ESG and the practice of greenwashing to investors will also be scrutinized carefully. It's obvious that integration across client management, compliance and conduct risk, AML, trade monitoring, branch and rep monitoring are all big needs. And these are the ones that we hear about from our clients and prospects. Today, I have our guest, Ben Marzouk, financial services attorney at Eversheds Sutherland, who will be helping us to understand these risks from the regulator perspective. Ben, would you like to tell us a little bit more about what you hear from the regulators on Reg BI?
BI has been a major focus of the securities industry and broker dealers in particular the last couple of years. The rule came out in June 2019 and had sort of a 1-year implementation period. And now that it is fully taken effect and firms are expected to be compliant with the rule, we've seen most recently a number of different kind of examinations of broker dealers regarding Reg BI and Form CRS as well, which has a number of different components, including a disclosure component. We're seeing now a bit of a shift from those initial Reg BI examinations, which frankly were focused on the more egregious failures of broker dealers, things like not having a Reg BI disclosure document, not adopting any policies or procedures pursuant to Reg BI, but really, more egregious failures, compliance failures. And now we're sort of shifting and pivoting to a phase 2 examination that the SEC is leading for broker dealers. That's focused on more of the substantive issues, the quality of the actual disclosure, the way that firms are considering cost and things like reasonably available alternatives into the calculus of whether or not the firm actually made a recommendation in the best interest of the retail customers. So I think that's been kind of the shift that we're seeing in the marketplace.
Moving to the next topic, I hear cybersecurity is another area of focus with recent risk alerts from SEC. With the hacks from SolarWinds, Colonial Pipeline, and others, the protection and privacy of client data within wealth management firms, as well as with outsourced vendors, have become very important. Clients' account information, personal details, and portfolios are very vulnerable for misuse, for example, through phishing. Ben, what are you hearing on cybersecurity regulations?
Yeah, I agree, Laxmi. This is always a top priority of the securities industry regulators. I mean, there's so many different companies that are impacted by cybersecurity issues. I generally, really am more focused on the securities regulatory aspects impacting the financial services industry. But look, if you take a look at any annual examination priority letter that as the SEC and FINRA issue annual examination priority letters typically at the beginning of the year. And if you take a look at any of those letters in the last 5 years, I can guarantee that cybersecurity made an appearance on those letters, if not in a prominent major place on those letters. I mean, this is an ongoing concern for financial institutions because they obviously have control or custody or some kind of power over a customer's finances. And given that, they are easy targets for any kind of bad actor that's using some kind of spyware or trying to hack into a financial institution's systems to try to get access to this money and get it into their hands. So this has continually been a concern, and it's something that the financial institutions need to consider, not just from an SEC FINRA federal standpoint, but also from a state standpoint, since a number of states have cybersecurity regulations that do impact the business operations of financial institutions.
There's a lot of AML concern in the market as well. The Division of Examinations came out with their AML risk alert in March 2021. They want to prevent misconduct that could threaten the safety of investor assets and the integrity of the financial markets. Ben, what are you hearing on the anti-money laundering regulations?
For financial institutions that we represent, anti-money laundering continues to be a hot topic. Just like cybersecurity, it's one of those issues that always appears on the FINRA SEC annual priority letters. It overlaps significantly with cybersecurity as well. A lot of the incidents have similar root causes and usually result in the filing of the suspicious activity report at the end of the day. Things that are really troubling firms are KYC, CIP, customer due diligence for legal entity customers, knowing who to run that on and who not to, and who ultimately is the ultimate account owner in the case of anti-money laundering cases. FinCEN also has a number of rules that are in the works or still kind of at the deliberation stage. A lot that would apply to sort of like private unhosted crypto wallets. There's of course the potential for a lot of the anti-money laundering rules to be extended to SEC registered investment advisors. That's not the case right now, but that may be in the works in the future. So those are all kind of hot topic AML issues for our clients.
Thank you very much for your insights, Ben. Appreciate it very much.
Thanks, Laxmi, again. I appreciate it.
ESG has also become another hot topic with regulators. Climate change, social inclusion and diversity, and corporate governance have become big areas of focus for the Biden administration. This has also started the trend of huge shifts into ESG investing. Lemire is in the process of releasing our ESG solutions as well. Today's wealth management customers are looking for firms that can offer them operational efficiency, visibility, transparency, and above all, assurance and trust. Only firms with streamlined front, middle, and back office processes will be able to meet these key customer objectives. Easy to use workflows, gathering data as business happens, good analytics and dashboards, automated exception flagging from a single source of truth are what our Grace platform of solutions offer. My philosophy and my objective in producing Lemire systems has been to enable firms to establish and improve their process for customer protection, prevent reputation damage, and grow their customer base that can trust the firm is working in their best interest. Of course, we at Lemire would be delighted to discuss our approach with anyone in the audience who might be interested in knowing more about how we have enabled firms to demonstrate their compliance through a single source of truth across the enterprise. Thank you very much for being part of our discussions today. We really appreciate it and have a wonderful day.